management of TCS, the CEO N Krithivasan, as well as CEO NGS joining us in the show. Good morning, guys. Thank you so much for making time.
Thank you. Good morning.
Okay, I wanted to begin by asking you, Krithi, yesterday you went at great lengths to try and explain to us why the disconnect is there between revenue booking as well as, deal signings. But just help us understand, is the disconnect happening on account of some deals which are coming to completion, or there's also pause or delay in the rest of the deals which are ongoing as well?
Everything, right? Like what happens usually, like we have some large programs, and if some of those transformative programs come to an end, then it has to be, that revenue has to be replaced with something else. And there are also customers looking at what is the return on investment they are getting on the current ongoing projects. Do they have to reprioritize them? Do they have to optimize them? So some of those decisions are taken, and sometimes some projects get paused as well if they don't see a ROI. Now, at what pace we are able to replenish this loss in revenue? If we are normally in a good quarter, we will be actually adding more at the top. So what goes out of the bottom is less, and you are able to show a good growth. But when customers are looking at cost optimization very strongly, we get into a situation where they pause more projects, or more projects are not replenished. For instance, in last quarter, we had a major project in Europe coming to an end. Okay. And it's very difficult to replace that kind of revenue. It was a large project. So such situations result in your degrowth as you see here. Flat growth as you see here.
Okay, fair enough. But is that likely to continue for the next couple of quarters as well? Because you would have that plan in place in terms of how deals are coming to an end or seeing a bit of a pause?
We know what normal projects are coming to an end. We also know what is the new revenue we are adding. But what we will not know is how customers reprioritize other ongoing projects based on, the return on investment is based on their perception also. What are their benchmarks on continuing the projects? That view we will not have. So, and that view also keeps evolving based on their outlook on how the economy is going to turn out to be. So it's difficult to predict. Like, we definitely know the ongoing projects which is coming to an end. We know the new projects, but there are quite a few unknowns as well.
Quite a few unknowns, and I think that's the reason NGS said that they're looking at only 15 days at a time. I don't know how do you plan a business with just 15-day visibility, but at least there would be some internal estimates, right? When do you see the recovery? Is it going to be the second half or let's say Q4 this year, or only in FY25?
Oh, we call it agility, right? So if you have to do it, we all used to do a quarterly and annual plans, etc., etc. But we do have an annual plan, but then the parameters that we need to juggle are so much. Then one has to be frugal, one has to be agile in the current circumstances. Coming back to your question on whether it will happen, how H2 will be looking like, and are we seeing a Q3 to be better? It's seasonally a weak quarter. As he explained, I think we have some visibility into what we will do, but there are uncertainties in terms of how customers will reprioritize some of this. This quarter is also a year-ending quarter for many of our customers, so they will also try to shore up whatever they have to in their P&L, in their books. So I think Q3 is a number of working days is less. So we'll have to take all this into account while calibrating what we will do in Q3. And to that extent, I think, it doesn't look like, Q3 will be a very strong Q3, right? Unlikely, but we'll wait and see on how Q4 turns out.
Okay, but at least, are you seeing that the furloughs or seasonality is going to be much worse this year versus the historic averages, or it's going to be in line?
I think it's going to be in line. We don't have any interactions with customers to the contrary.
Okay, and just a last word, when you said the recovery will probably start in Q4 or it will be FY25 only?
Very difficult to say, as I said, but first is that we are now looking at Q3 and then see how we'll perform in Q3. How do we continue to be efficient? How do we continue to execute well? If we have enough people and enough bench, can we execute some of those projects ahead of time? These are all the thoughts that goes in our mind, right? To ensure that we have a decent Q3, and then worry about Q4, right?
The amount of parameters you have to juggle with, I wouldn't want to be in your shoes. It's very difficult to manage all of that. But Krithi, one thing which has been holding out is the UK business, right? A good growth of almost 11% year-on-year basis. What is supporting the strength there? And secondly, when you look at it in comparison to North America, which is pretty much flat for you on a year-on-year basis, and it's a very large market for you, what's happening there?
See, in UK, our participation in major programs has been very, very high. And we are the number one IT player, if at least in the kind of work we do, for quite some time. And so it gives us enough opportunity to participate in every large deal. So compared to the size of the market, the kind of projects we win there are very big and quite, I shouldn't say disproportionate, but very high. And and also the behavior of the customers or the perception, like few quarters ago we explained, maybe it's possible in UK, they have factored in a weakness in economy, and so their perception on what projects should continue, what should not continue is also quite different. And the third aspect is some of the very strong deal wins we had in the past in UK. All these things put together are ensuring that we are able to add more in UK and continue to get the revenue. US, you all know, like there are a lot of uncertainties, multiple factors at play. So which for us also a large market. Banking, there is a certain amount of while the banks are doing good for the current, but there is an uncertainty on future. Retail is weak. Even some of the sectors within retail, the essentials and all, which used to be strong, they are showing weakness. So manufacturing is doing good globally for us. So US is, we will probably need to take maybe some more time for it to come back to strength.
Okay, so a few more quarters before US...
I don't know, a few more quarters, I said some more time.
Some more time before US comes back to that strength, and for now BFSI and retail is a bit weak, manufacturing is doing well. But NGS, in terms of the deal wins, that has been very robust this time around as well, $11.2 billion. But the question is, what about the pipeline? Does it still remain as strong as it was earlier, the funnel for the fresh deal wins?
Absolutely. I think we see a strong pipeline, a lot of qualified pipelines consisting of deals of all shapes and sizes. Almost all of those opportunities now come with digital and cloud technologies, and we launched the AI.cloud offering, taking a cue from all the opportunities that we see. How do we bring cloud, data, deep learning, machine learning, those kind of technologies, including some parts of generative AI into the whole thing. So I think pipeline looks very strong.
Okay, so pipeline looks very strong, but this is a question I was asking Samir as well. Is there a tug of war with the sales and marketing team to let go of the pricing and margins a bit to get more aggressive in the bidding? Is that the case?
No, like we take a very strategic call on it. It's not a tug of war between sales and marketing and delivery teams. Like we take a strategic call. We decide what is the value of the deal to us in the long term. Okay, and if we find the value of the deal in long term, and I mean value of the deal, not only from that deal, by doing that program, what else we can do, we look at everything and take a call. In TCS, rarely you would find teams fighting on these things.
It was on a very lighter note, but nonetheless, what I want to understand is pricing getting more competitive? Because a lot of global players are fighting for all of these large vendor consolidation deals. At least that's what we hear. Your take?
Pricing will always be competitive, but if you look at our last quarter realization, we have been able to hold on to our overall realization and pricing. So at the company level, we don't see a pressure on that.
Okay, no pressure. But, just coming back to that deal, when you said there is various nature of deals which are there in the pipeline, but in between we had seen that there were smaller deals which were getting a lot more converted versus large deals. Has that turned now? Is it a lot more larger deals and vendor consolidation, cost optimization deals which are coming in versus the smaller deals which have been put on the back burner?
I think so. I see that happening. There are a stream of small, immediate term deals which are related to, let's say, proving a technology, or how do I adapt the architecture that I have into bringing in generative AI. Those kind of smaller deals do happen. But given the cost pressures that our customers have, the focus on prioritizing, cost and optimization is there. So that results in a good number of outsourcing opportunities, vendor consolidation opportunities, in which we are participating. The long-term deals that we have been working on, which typically, that the horizon is about 12 to 18 months to shape. So whatever we have been shaping, I think they're all maturing. I've not seen, barring very few instances, but majority of the long-term deals or large deals that we have been working on, I think they seem to be intact. They continue to engage with us, and fact is that we have concluded 2 mega deals in this quarter.
Talking about one of those mega deals, BSNL one, what's the timeline of the execution of that? Because I understand you're looking at completing it within 12 to 18 months as well. But what about the margins? Is it a project which is coming in at a bit of a lower margin as compared to your other averages?
So it's, I would say so. Say so. But then it's much more strategic. This is a completely indigenously developed technology. Rolling out a modern 4G, 5G network, which is software driven, and the radios are software driven, and looking at the intelligence on the edge, and see how do we roll out a network which is self-healing, self-optimizing, and bringing a lot more cognitive things into it. So it's a very, very strategic deal in that sense. We don't get this scale in anywhere else in the world. 100,000 plus towers, pan-India, across different terrains, different weather conditions. How do you calibrate these radios? What kind of algorithms that you will have to build so that the capacity, the experience and the coverage that you want to give it in the network is really superb. So it's both intellectually challenging, at the same time, executing under some trying circumstances is the kick. And certainly it will open up a lot more opportunities across the world.
Sure, a lot more opportunities, but have you started the execution now itself, or it will start from Q3,
No,
Q4?
yes. We have already started it. We have started to roll out the sites in about 2 circles in North Zone as we speak.
Okay. He was talking about generative AI and how that's, of course, coming up in a lot of conversations. But are clients investing big time into it, or do you think that it's still very experimental in nature and they're just looking at maybe doing some, pilot projects for now?
See, our customers are thinking about it a lot. Okay, and they have started investing, and many of them are also trying to experiment with large language models, like what does it mean to them. Some of them are creating sandboxes where they can test out some POCs or use cases. So, but it's like adoption of any technology. Really, it starts slow, but it will pick up momentum as customers gain confidence and on the value that it can bring to them on the long term. But it will definitely pick up momentum and pace as we go along.
Okay, so likely to pick up momentum, but wanted to get a sense from you as well as far as the internal restructuring that took place just in the quarter gone by. Have you started seeing fruits of it already? What was the rationale behind it, and is there any such more restructuring in the pipeline that you're thinking about?
See, the rationale I think we did explain internally also. See, we wanted to bring the whole power of TCS to each and every one of our customers. And that could be done like if you are able to keep all the customers that belong to the same industry in single group. That's where, and the customers also felt that they were getting the full power of TCS by that. And our associates are also they're trying to, the sense of belonging was I belong to retail or I belong to banking. That we felt that comes more naturally. So the immediate results definitely are there to see. We find a lot of positive comments from our customers as well as from associates that they are more happy with this setup because it appears more natural to them. And any other future restructuring, like we keep looking at what is good for us, right? I was telling yesterday also, organizations keep evolving, right? And we continue to tweak the structure as what we think is required. And now we are more agile, like from a previous structure to this structure, we are able to transition in less than a quarter. So it gives us more confidence that if you have to tweak, we will be able to tweak.
Okay, able to tweak and be agile. But are you looking at $9 to $10 billion as the quarterly run rate for deal wins going forward? I know we throw this question at you every time, but What's the answer this time?
No, I think, we are happy that we have clocked 10 billion plus in 3 successive quarters, and the more we do, better it is for us. So internally, we always keep pushing the bar, but externally, I don't think that there is any need for me to commit, saying that we'll be in this range or that range. But we are happy that, look, the pipeline that we have, we should be able to do well on the order front.
Okay, but you talked about yesterday how 70% of your productivity got free on account of the generative AI that you're using. I want to know, what are you using and how are you able to free up so much time?
No, it's
Give us some tips.
It's about trying out a new technology. When somebody says that the new technology has come, you try it out first so that you understand the art of possible. So I've done some of this. For example, a lot of my interactions over email. Majority of the emails, I find that, look, it is able to mimic my language. It's able to mimic and then put everything in the draft folder so I can review and then I can quickly click on it. That's one example. And then the meeting scheduling is pretty much, done, and I just have to say, yes, I accept this meeting, then it goes off. So many such examples are there. And internally, if I want to draft a mail communication, generically, I use it it comes up with a draft which is better than what I normally do. So it's so as individuals, I think, we all love it, this technology, but how will it pan out for enterprise level is something that we are calibrating and our customers are calibrating. The challenge is for us to make sure that it is responsible and it is behaving the right way and keeping the customer's interests and individuals' interests always ahead of its own intellect, right?
Smart use of that, but since it's also the time of World Cup, let me throw in a cricket analogy. The pitch is uneven. We're seeing a lot of Yorkers coming your way. You'll be able to hit it out of the park in FY25?
A helicopter shot is in the making.
Okay, on that note, I'll let you go, gentlemen. Thank you so much for making time.
Thank you so
you.
much. Appreciate your time.
Appreciate this.